Often the first consideration you need to make is when you want to start your business is how I trade. Do I be a sole trader? Am I self-employed? In other words, if I'm going to go into business with someone else or a partnership, or alternatively, you could be a limited company. It's quite an important consideration because they do mean different things. There is one other sort of possibility, a limited liability partnership. It's a little bit sort of complex and probably not relevant for the vast majority of sort of people. Often when you start in business, it makes sense to probably, until you know your idea is going to work, to probably be, unless you're doing something very risky, to be self-employed. That means basically the business is you. You're the business, you're taxed in essence and everything else, you're self-employed. Being a partner in a partnership means much the same sort of thing, other than the fact that you're in business with someone else and you split your profits in line with your profit share agreement. So if you're in business with someone else, it'd be 50-50 between the two, probably more likely than not. The third sort of most common option is a limited company. A limited company is a separate legal entity. It is not you anymore. Yeah, it's probably sort of more or less, but it is its own. It's got its own legal characteristic. You will probably be the shareholder. You'll probably be the director, maybe with some other sort of people, maybe spouses as well, being directors or shareholders. There are different sort of advantages of being a limited company. The tax rates of a limited company are a lot lower. One of the great benefits of being a limited company is if you've got any claims, risks, or anything else, or liabilities, the risk, if there are any, they're ring-fenced with the limited company, so no one's got any recourse to your personal assets, subject to one or two sort of points where you might be trading fraudulently or something like that. Whereas if you're self-employed, basically if you've got any liabilities or claims, then your personal assets are on the line, really. So it's one of the big advantages of being a limited company. Also, people quite like being trading with a limited company because there's a PR perspective. People think you're a nice sort of size and quite sort of safe. Typically, though, although it's got some advantages, the disadvantage of being a limited company is cost. Basically, there's a little bit more cost. You've got more accounts or more detailed accounts to complete, and you've got to file accounts and your information on the public records. File quite short accounts, having said that. But there's a slight disadvantage. What I would suggest, unless you are doing something particularly sort of risky, which has got putting your personal assets on the line, is probably to start off with as a self-employment, a sole trader, as it were, or a partnership if you're in business with someone else. And then if the business is a success, you haven't incurred a lot of cost of setting up a limited company, then you move over to a limited company when you're making some profits. It's quite easy to go from a sole trader to a limited company. It's not quite so easy to go from a limited company to a sole trader, going out the other way. It is quite an assessment. It's a bit of a technical sort of assessment. What I would suggest, though, is you do speak to an advisor, maybe your accountant, just to see which is the best structure for you.